Hey guys, today is December the 3rd, Saturday of 2022, and I wanted to go over the US dollar. Interesting price action on the US dollar. So this is a snapshot of the currencies. You can see the euro, the yen, the pound, the CAD, Swiss. In regards to the weekly cycle, there's two important cycles here. There's really three, but I'm just going to focus on the ones that are working. The first one is the 181. Interesting. 180 degrees, 180, the opposite of a circle, cutting it in half. You get the idea. So this is the 181 cycle, and you can see that so far it's pulling back the dollar. It peaked around November. The dollar kind of peaked a little earlier, and the cycles are now just pretty much hit a peak around the last week of November, and now they're pointing down. Now I also want to show you the dominant cycle. And the dominant cycle hit a peak, pretty much worked out with the high of around October, the 10th. This is a weekly chart. And you can see that the dominant cycle is down to like July of 2023. So if you take the dominant cycle, which is 81, and add the 181, this is kind of like what you get. But this remains to be seen. So we'll see how this plays out. I just wanted to show you what the weekly cycles are showing in regards to the two important ones. Let's look at the daily and see if we get any clues there. Okay, so this is the the daily chart, and there's two important cycles here. One is the 325 cycle, which is this one right here, and this one pretty much worked out well. This is a perfect scenario when you have the daily and the weekly in sync. I kind of feel like it has a little more potential. Probabilities are slightly higher when they're in sync. And this one has been acting pretty good in regards to cycles. So that's the 325 right there. Hit a peak around October, lined up there. And the next one is the dominant cycle, which is 95, but I have it here as 97. Now, this is interesting because the dominant cycle is bottoming out right now as we speak, December, pretty much the 3rd, tomorrow. And now this cycle is going to go up. So you got to be very cautious now if the dollar gets a little momentum to the upside here. Just got to be cautious because this is a daily dominant cycle on the daily chart. While we know that the 325 is down with the 97, it could kind of go sideways here and get a little bump and then go down. So just be cautious. Watch the dollar next week to see if it kind of goes sideways and we get some volume and some bullish candles, especially Monday and Tuesday. Just be cautious because it could either go sideways or slightly retrace and then go down. This dominant cycle peaks somewhere around January, so just be cautious there. So this is my geometry chart. I got a few things. I'm building it up because it's hard for me to get the dollar DX futures, so I'm using DX cash, and I'm just kind of building up. And especially I'm traveling right now. I'm in Pennsylvania, so I'm doing all this in the laptop, so it's a little more challenging. So bear with me. Here in the dollar, there's a couple of things. This is the Dewey cycle average. We see that the Dewey cycle average, let's close that out, is hitting a peak around December the 13th. And this is a mirror cycle from this high in September. And it's kind of going sideways, slightly leaning higher, which is somewhere right here with the Dewey cycle. Some of the Dewey cycles are up. So I wouldn't be surprised if next week we kind of get a bounce. I'm just kind of showing you what I'm seeing. Although the advanced swing, Gann swing, and the advanced swing are negative, the Dewey cycles are now pointing up. So it'll be interesting to see if we'll get a bounce or like a little retrace here. But it all remains to be seen. Let's go to the other clip and see what we could extract there. Okay, on this chart, this is going to be a little fascinating for me because this is a Elliott wave. And according to Elliott wave on the weekly chart, this is a wave 1, 2, 3. And we're working on a wave 4. Wave 4 target could be around that 101 projection all the way to 99. Now, when we put the Fibonacci, using this range right here. We're hovering around the 38.2, 105. The 4 will be the 50% center of gravity, and then the other 4 projection will be the 61.8. Now, mind you, we have the 50% right here. The 50% has a tendency to pull in bull buyers, thinking that this is a discount. And they're going to try to hold that 50%. So it's going to be interesting to see the dynamics. Stokes are kind of negative. And if we put some linear regression channels, we're really at support right here. So it'll be interesting to see how this is going to play out next week. I mean, we're very at support, and there's one kind of support over here. And using the ellipse technique, the week of 12-9 could potentially, whatever's going to happen is going to be could be very strong. Either a flush to the downside or a reversal. Now let's go to the daily chart. Let's take this out and see what could we extract here. And then the daily chart, it has a wave 5, and this is 1, 2, and we're either on a 3 or working on a 3 still. And there could be more lower price action. And the projection line is at 101 all the way to 93 if it's going to continue doing working on a wave 3. And the reason why I include Elliott wave, because I am trying to see how does it work in correlation with every other technique that I use. So I'm just trying to in real time and building muscle memory just to see how good Elliott wave theory is in conjunction with all the other stuff. I know that early Elliott wave really worked out really well with the Chemical CCJ picking out that wave 5. I was very surprised. So I'm still incorporating other charts and other instruments, because I just want to see if all the other stuff fail and Elliott wave wins, or Elliott wave fails or has a flaw, while the cycles or the other techniques I use have more of an edge. So I just want to see how it's going to play out. So that's in regards to the Elliott wave count. We're below the 200, pretty much all the moving averages. So that's very bearish on the daily. And you can see the linear regressions channel pointing down. I have potential targets to the downside here, which is already 103 all the way to 102. So this is a area I'm watching. And I got some, and it's at support right now, which is at 104 from this swing pivot point. So this is kind of support. But if this doesn't hold next week, this whole area with the linear regression channel, and mind you that the weekly, the linear regression channel is here and the 50s hovering around here. So there's going to be a lot of support using those indicators. Target to the upside, if we get a bounce, there's wave 4 over here on the daily, 106 all the way to 108, and even pretty much 108. I don't think it's going to get up here, but I have it here just in case it's going to continue pushing higher. But so far, these is the targets that I have. And you can see the Stokes are kind of pretty much flat here. On top of that, we have the 50%, which is all the way down here. So we'll see how we're going to play out for next week in regards to all these theories all colliding together for next week. Okay, in regards to seasonality, what's interesting is we got the green, which is the 10-year. The blue down here is a 5-year, and the yellow is the 15. You can see that the 5-year kind of goes sideways, and somewhere around the 12, it gets flushed to the downside. So you could either go sideways to up, bull trap, and then flush down. While the 15 pushes even lower and finds a low somewhere around December 6th, and then kind of goes sideways to higher, kind of sideways. And the 10-year, pretty much the same thing, finds a low around December 6th, kind of goes sideways. So the 15 and the 10-year are kind of mirroring themselves in regards to price action and date, but the 5-year kind of holds onto the 12 and then goes down. So that's what I'm getting in regards to seasonality and dates. Okay, so this is the last chart. This is the master chart, and there's a few things I wanted to show you. First off, we're going to start off with the solar cycle. And the solar cycle is very bearish. It hits a cycle low around pretty much the end of December, beginning into January of 2023, but that trough hits the last week of December. I did some spectrum analyzer on this program and used the RSO algorithm or oscillator. And I got 3 important cycles out of there. This is a composite of both. So it's kind of confirming December being low, weak. This one kind of hits a trough around December 23rd. Let's take that out. And then I ran neural net computer just to kind of see what's the probability of this is a turning point. So we have a turning point around December 8th. And then there's also one around December 29th. So I'm looking at possible turning points to the low. You could probably do the 20th, but it looks like December is just pretty weak overall. So it wouldn't surprise me if we push lower towards the end of the month, around the 29th. Now going into our Gann square, squaring the range, you can see that we're finding support at this angle right here. If it pushes lower, you have this angle, then the 1/4 right there. If we open this one, we're a ways to this level, which is 103, and then the key level to watch would be 102. Let's put this one there, pierce that, 103 and 102. Then lastly, our what I call natural cycles. Just looking at the natural cycles using the annual Q, you can see that this is kind of like making a decision for trading and you're kind of confused. The quant picks up that is more a probability of it going lower than higher using a 12-year time frame. That's what the quant computer estimates. So there's high probability that we're going to keep pushing lower into December. I'm going to take that off. I want to show you some things here. So this is the annual cycle, that blue line. That one goes down into December, so last week of December, so that makes sense. The annual and decimal, somewhere around the 21st, pretty much towards the end of the month. It gets very, very, very bearish. We take those two out and then kind of use a 10-year average of what the dollar has done in the past. And you can see that it finds a low, possible low around the 21st, and then it kind of rallies up and then goes into February and then really rallies. And that's in regards to the 10-year. Let's see, annual, decimal, we already covered that. You can see how it kind of all locks in. This is the solar, 21st, the 29th. It's interesting how it's all going to play out. But I figure I'll show you that. I think that's it. You minimize that. What's interesting is that the on the daily, this is a wave 5, 1, 2, 3, maybe here or maybe a little lower, and then a 4, and then a 5. And on the weekly, it's a wave 3. Well, you know, all the other cycles are pointing lower. So it's going to be interesting to see how this is going to play out. And you know already the dominant cycle on the daily chart now turning and starting to go up. So it's going to be very interesting. And seasonality saying that December is very weak. So all these things kind of like line up, and then some of it just goes against each other. So it's the thing. It's the life of a trader, making an educated guess with statistic and probability of what could possibly pan out. Well, hopefully you like this video. I'll keep you posted on the dollar using cycle and double Gann techniques, and I'll see you next time.